The reason I love options is they give anybody the opportunity to start making outsized gains on their capital with the right techniques. Now, if you want to start investing in stocks, yeah, you can do that, but you kind of need a lot of money to make money in the stock market. And I'll give you an example. If you were to buy 100 shares in Netflix, that might cost you what, $45,000, right? So you need a fair amount of money to be able to do that. You could buy a call option on Netflix, which would allow you to effectively rent Netflix stock for a month, and it might cost you $800. All right. So the cost of getting that exposure is much, much cheaper. I often liken call options as to being like the Airbnb of the finance industry. Instead of renting a property, you're literally renting a stock. It gives you most of the benefits of property ownership or stock ownership, but it's for a finite period of time. All right. And that is why, as options traders, we are obsessive about identifying those high probability moments of time to enter a trade rather than being exposed to risk all the time. The other thing that I absolutely love about options is their asymmetry that they offer. Asymmetry just means one side is different from the other. Both sides aren't the same. And when it comes to options, it's talking about their risk return profile. So when you buy an option, let's say when you buy Netflix stock, if you buy 100 shares of Netflix, the most you could lose is $45,000. All right. Stocks can go to zero. I've seen hundreds of stocks go to zero over the years. I'm not saying Netflix is going to, but it can happen. When you spend $800 on option premium, that's the most you can lose. Now, with both the stock ownership and the option ownership, your upside is uncapped. All right. So options give you this very attractive leverage to the upside whilst limiting your downside. And that's called an asymmetric payoff. And that's a huge benefit. If you're trading other leveraged income instruments like futures or Forex, yeah, they've got leverage, but it's a double-edged sword. It can work against you if you get the trade wrong, just as much as it can work with you if you get it right. Whereas with options, you've got that kind of inbuilt down limitation to your downside. Aside from that, there are many, many versatile different trading strategies that you can employ with options that we share with our members in our Accelerate program.
So, I mean, it's great, right? Because you've got a limited upside but limited downside because you're renting the stock, isn't
That's
it?
right. Yeah.
Yeah, you're not stuck. I saw people in my career in 2008, and they were constantly buying the dip, right? Especially with Citibank stock. And I remember
Mhm.
that everybody was going, let's go lower, let's go, let's buy, let's average down. And it doesn't work, does it? Because things can just go a lot lower to $1.
Yeah. Well, or less, as was the case with Citibank.
Yes,
Yeah.
it was,
Yeah.
isn't it?
Yeah.
But yes, and that's great. Are they complex and difficult to trade, Simon? These options?
No, they're not. I mean, they can be, all right. People, I think, sometimes deliberately make them out to be complex, but there are only two kinds of options: call options and put options. You buy a call option when you think the stock is going to go up. You just remember call up, as in call up a friend, and you buy put options when you think the stock is going to go down, and just remember put down, as in put down your phone. And look, there are strategies that you can add that are slightly more complex, just to help you manage your risk a little bit more. And we teach people all those techniques in our membership programs, but no, they're not. They're really not complex.